Welcome everyone to the Kendall Report. It is Tuesday night, and just to remind you, first to subscribe and like this video, but this is the final video for the week. I will be traveling until a week from now will be the next video that will be out. And I'll try to have some activity on Twitter, so if you're following me there, it's Twitter/PortfolioXpert. There's no E in the expert. And you can follow me there. I'll try to keep up with some things over the next several days, but for the most part, next Tuesday will be the video that you will see. So tonight, we're going to go a little bit old school, back when I used to do the live stream. So I'll go through our normal front end, and I'll go through the markets. And then after I'm done, I'm going to cover some commodities, and I'm going to go through a few stocks. And the ones I'm going to cover are the ones that you folks put in the timeline. So make sure you give me the trading view symbol for what you want me to see, especially on want me to review as far as the trading view stuff goes, or the commodities. So make sure you give me the exact symbol. If I don't have the exact, I'll just move on. So I'll pick them randomly. And so that is the way we'll run the show tonight. So let's get into talking about what happened yesterday. What the heck was that, right? I thought we could rally back toward the 10-period moving average, but that was pretty insane rally. Try to figure out why it occurred. I don't know. Crude oil was down $6 and change. Maybe that was it. Comments from the Fed, no wait, that was all negative, or so it would appear based on what Bullard was saying, that we should be at 3.5% by year end. That's interesting comment, right? So that wasn't it. So there really was just the classic case of more buyers than sellers, and it was a stampede. And then the markets closed, and right as we close, Netflix comes out and reveals they're losing subscribers, and also that they're going to go on this giant global search for people sharing their passwords. So that ought to work out really well for them. They should be lucky they're getting paid, and it'd be interesting to see how much more they lose. But last time I looked, Netflix was down 24%. The futures got hammered on that news right as the markets closed, and we've traded down a bit further, retracing about a little bit more than 0.5% of the 1.6% gain that was realized yesterday. And we actually traded up over the RTX number. Go through all the details here in a minute. But the Nasdaq was up 2.2, Russell up 2%. So just a giant buying party, all to be finished up with some really negative comments and results from Netflix. And I have a feeling we're just going to continue to be on this roller coaster. And you'll see here when I go through the technicals that there was definitely some influence there with what happened from a technical viewpoint. So it was quite the session, to say the least. What else happened? We had, as I mentioned, crude oil down $6 or 5.7%. Came right back into the support that I talked about last evening. And then we had housing come in better than expected. So housing up 0.3, 1.7 million units. And then we had the permits come in 0.4 up, and that's 1.873 million units, which is a decent report, actually. And, you just don't know with these interest rates coming up like this what the true impact is going to be on real estate. All the real estate doomsday folks are screaming the crash is coming and all that. And we've seen what a barrage of videos out on YouTube, how the coming crash and it's going to be worse than 2006 and all that. Probably won't be that way, as I've been talking about, just continuing on housing, because we do have existing home sales coming out tomorrow. And, we're really seeing an inflation of the cost of the materials. So it's a replacement cost new, which is pushing most of the prices out. In some cases, there might be some market forces in demand, but for the most part, it's replacement cost new that's keeping prices where they are, and if they're expanding at all at the moment. So, but this was decent activity, I will admit that. So let's talk a little bit more about the rest of the week, since I won't be here. There's really only rest of the week, there's claims, a couple other things. What I'm going to do is try to set up the range on what I think we could see for the week when I go through the technicals. So I'll set up the primary indexes that way. we'll hit through the interest rates and get through everything, and then I'll be soliciting those symbols from you. And the timeline is not real active, so if you want to put in some commodities, and I'll probably cover Tesla comes out also tomorrow. So I think it's after the close tomorrow, though. So those effects probably won't be around until Thursday. But anyway, let's get into. I had a kind of a late start here, so what I want to do is I'm going to get up here and bring up the database live. I haven't looked at it yet, so we're going to do a bunch of stuff live here. So let's go ahead and move over to the database. Okay, as we look at the database here, we had kind of a rotation going on. We had 1,500 buys on 3.2 and 104 on the 1.2, so about 1,700 roughly. And then we had, on the sell side, we had about 11, we'll call it 1155, 1154 on that side. So but basically a rotation. So we didn't really pick up much. We were down around 37. So we're back at 41.95, just below the magic 4,200 level. But it's going to be interesting to see how we trade tomorrow after this news from Netflix, and see if there's some skittishness from the standpoint of market participants looking forward on some of these other earnings that are coming out. Let's go ahead and sorry about that, pushed the wrong button. Let's go ahead and take a look at the S&P. So as we look at the S&P, this is the situation that I wanted to point out to you, is that we have the declining 10-period moving average. Now it's crossed through its first, or actually second derivative. PPM2 is actually decelerating, so the trend is still rolling over. The 21-period moving average is up at 44.91. What I discussed in yesterday's video is that we could trade up toward the 10-period moving average, 44.45. And we got actually above that. We printed as high as 67, and the RTX number yesterday was, bring that up on the screen for you. The RTX number was at 44.49. We closed at 59, so we did get a RTX sell signal. We are down a little bit here, down 23 handles, about 0.5%, as I mentioned earlier. And very mixed picture. And the key number in this pattern is going to continue to be at the 40-period moving average. 4,400 is that number. So we're just hovering right above that. I talked about this in last night's video. We've been hovering just along the 40. There is some Fibonacci projections for a move potentially down to 43.50 and maybe as low as 42.43. That's these numbers that are showing right here on the scale right now. So there is still some potential downside, but it looks like we're just locked in this pattern in this sideways zone. I'm going to bring up the weekly chart. I'll do this for all of the futures here as we go through. Yesterday's high, 44.52, we actually traded just above R2 on a weekly. R3 on the weekly is 44.87. So I would look at that between 44.87, 44.85 is the 40-period moving average on the other side. The one thing that is starting to happen here, which is encouraging, and I've talked about this pattern, there's a couple things here that you need to watch out for, because we're seeing the PPM start to turn up on the weekly here. You see all of the PPMs pointing to the upside. PPM 1 is actually crossed to its first second derivative. And that would suggest that we're going to challenge this pivot number that's up at the top up here, which right now is 47.21. That's a big number up above the markets. I don't expect to have that happen this week. I would suspect that we'll stay below the 40, we'll call it 44.91, 44.85 should cap this market out. But we're starting to see signs here of a potential move to the upside. And it's amazing. You would think that wouldn't be possible with everything that you hear and read out there, but that is what's setting up on the weekly patterns. As I said, just the numbers I laid out on the daily is going to be for that, right at that 40-period moving average. That's your pivot point. So it's not far away, 4,400 even. And we get below that, then look at those Fibonacci numbers. So you can go back and freeze this video and look for those Fibonacci numbers on the downside. But we're starting to see a bullish setup on the intermediate charts, which I think is very interesting. And it looked like that was not going to be a possibility if we went back a couple of weeks ago. But certainly there's enough people negative out on the market now that maybe we're setting up a potential turn. And there's still a lot of resistance all the way up to the 46 handle. So it's not going to be an easy moonshot out of here, but it is starting to set up a pattern that could finally be somewhat bullish. And when we get the numbers, one of the things I will tweet out on is the weekly numbers when they come out on Friday night to see if there's any traction in the database. So make sure you're paying attention for that at that point. I'll stay with the weekly here. The weekly PPMs are also starting to look bullish here on the Nasdaq. And when I say bullish, that we're going to probably trade up into the moving averages here, but we do have, this is weekly now on Nasdaq, we do have some high targets above the markets. 14.5, 15,230 is in the number range right now that we're going to have to watch for. You see on this pop-up that's on the screen right now, the potential for the higher levels is as high as 16,000, and that would put us back and retesting the highs. And the pattern is set here. So let's go backwards here. So from the looking at it from a market grid standpoint, we're trading right now. We're trading at 14.8. We look for. Let me just get this number up right here. We're trading 14,066, 14,227, 14,4 would be R2. So we've already traded R2, but look for R3. I don't think we can get above an RXT on a weekly, but make sure you note these numbers. And those of you that have the indicators already have these numbers on the market grid, so you can just look at them there. Let's go ahead and go to the daily, and we'll set up the range here on the daily. This has a similar Fibonacci projections to the downside. The one thing that is happening here that is different, and like I've talked about, even though we saw this rebound yesterday, all the way back to the 40-period moving average, 14,188, high 14,242. We look at this declining 10-period moving average in here, 14,188 162 is going to be resistance, minus 0.53 on PPM1. So that is right at the point where we should see a rejection off of that point. So there's a bit of a mixed picture on the short term. The longer term stuff is starting to set up. We're going to have to get some better closes as we come into Friday to really get this to generate any kind of real momentum here. The daily Russell is next, and see, we traded right up and we did manage to get above that 2020 number. Seemed somewhat far-fetched, and last night when I was doing a review, RXT 2020.9, we closed above it. We got an RTX sell signal. I'll bring up the futures, the RTY, just for a second here, and you'll see we are down only about 0.14. And I've been talking about this pattern so long, I'm tired of it, because it's been the whole year where we've been waffling along the side here. There is some upward objectives right now. 2044, 2063 is a possibility. We'll go, and this is the futures that we're on now. I'm going to go back to cash, and we're going to bring up the weekly cash, and we can take a look there. The 21 period moving average on a weekly cash, 2079, R3, 2072. So probably an R3 is possible if we can get follow through. But after these Netflix print that we got earlier today, that may not be possible. For the most part, we're stuck just in this sideways range that we've been in. There's just nothing to point to except for PPM1 is above its first and second derivative. It's not going up or down, it's zero. And PPM2 is still negative, but it's starting to cross its first, second derivative. And what that tells us is we should move up toward the 21, possibly the 40 period moving averages on a weekly, which is 2079, 2170. So everything's all of a sudden looking more positive than negative, but there's still a pivot point just below this, and I would use that S&P pivot at 44 even. We close back below that, we could see some follow through. So I think we're going to see some crazy kind of gyrations around these numbers. I'm going to be very anxious not being here to cover the markets every day. It's what I do, as you know. So this must have been the bullish thing that happened yesterday, right? The 10-year going to 2.91. That must have been it. No, that wasn't it. I just think yesterday was, from an equity standpoint, was just one of the contrary days that they just kept betting this thing. It was crazy. In the last hour, they just kept punching out new highs, and they'd back off a few handles and they'd punch them out again. And meanwhile, we continue just to climb higher. And like I've said, right now, the targets here, this is the weekly 10-year. The target is for a 314 to retest the taper tantrum high, which is at 325. The Fibonacci projections here on the daily 10-year is suggesting 313, 344, and 364. So there's some big numbers out there, and like I said, it wouldn't sound like that's going to be bullish, but the market, this is something that I've talked to you folks before about, is that for years we've been used to watching the Fed lead the way, right? So the tail wagging the dog. This time, the dog is wagging the tail, which means that the markets are leading the Fed. The Fed is now going to have to adjust to what the markets are doing. And this is, I told you before, this is how it has always worked prior to Ben Bernanke. After Ben, Helicopter Ben, and all of this crazy QE, The markets have always led the Fed, not the other way. Fed policy will usually adjustment to market conditions. Maybe depending on some of the things that are going on, you would see some adjustments made by the Fed that were trying to lead the market a little bit. For the most part, they are following the market. That's what we're seeing right now. So 50 basis points, actually even more than that, has been built in right now. So the markets are doing for the Fed what the Fed can't do for itself. And as I've mentioned, I think Jay Powell is probably the weakest Fed chair that I have seen. I mean, Janet Yellen was tougher. That's not saying anything. Ben Bernanke might have been tougher. At least he was willing to say some things. This Powell character is a joke. I mean, epitomizes the entire government that we deal with and the people that run it. It's absolutely amazing. So the market's going to have to do for the Fed what they can't do for themselves. Let's take a quick look at the yield curve before I move on. So yield curve actually flattened a little bit. It's still positive. We're at 10 basis points over on the 530. That's this chart over here. Nothing really to talk about there. As I said, if we do go back inverted, we're going to have to stay there for weeks, maybe a month or more, as many as 6 weeks. We need to remain inverted, that from the standpoint of signaling any kind of economic event. The Fed wants to really avoid that if possible. One of the comments by Bullard I mentioned last night was that they could use the balance sheet to do it. I'm like, no joke. I mean, like, that's plan B. I think plan B is already being done, and they're going to want to keep this yield curve, if not steepening, not inverted. Okay, that's going to be the goal. I remember going back to 2020 when all the craziness happened, and people were talking about inverted yield curve and negative yields and all that. I said, no, that's not what's going to happen. And it wasn't, but we did see, and technically speaking, we're negative yields from an inflation, from real yields are negative, yes. But from the actual number that we see, we're not going to end up like there is, like we've been in Europe. Okay, next market we'll go through is crude oil. This is the daily crude. As I mentioned in last night, we did trade early on. We traded up to 108.37. My range has been 100 to 109. We basically got there in the we printed 109.20 day before yesterday. Yesterday meaning Tuesday's trading. We did we traded all the way down. We went back below around the averages here, 102.83. We closed 102.05. We're seeing a little bit of a bid in there right now, 102.28. I just expect to follow this upward trend that's in right now, but the PPM2 is still negative, 103.75. There's going to be resistance there, and we're going to need to stay above the 137. Could print down to 99.50. Let's go and take a look at the weekly. Weekly continues to climb along this 10-period moving average. Right now, it's at 102.02. I mentioned 102.40 last trade here. And we should stay above that line. PPM1 is at a plus 1.29. PPM2, 2.13. And PPM3, 1.20. So we're still positive. Those are big uptrends that are in there. And absolute worst case, if market declined, would probably be down to maybe to S2, which is 99.44, S3, 95.77. Those would be the extremes. And if you're trading crude, it's probably the point where you're going to want to look to buy this stuff. Next market we'll look at here is gold. This is the weekly gold. We're hanging right along that 10 line, just like I've made this comment before. It looks almost identical to the crude oil. So we're sitting here trading right now. The 10 is 1944, last trade 1947. And we are seeing ppm1 cross over to the downside, ppm2 to the upside. All this is telling you, I went through a lot of detail, is that we're going to maintain along this line to the upside. It is going up right now about $10 per week, so it's going to be 1955 plus as we come into next week. But we are seeing some momentum loss in this ppm1. So, but this configuration is still good. I still think, as I told you, I'm looking for some kind of breakout and some kind of move to the upside here. And when we get some new Fibonacci projections, that's what I'm looking for now. Final market of this sequence will be there. And as I was saying, I'm looking at the timeline here, and if you want me to look at any commodities, you better throw them out there right now. Just make sure you give me the trading view symbol. All right, so let's look at Bitcoin. Bitcoin just continues to go sideways. We're back at 41,380. The 41 R2 is 41,893. We basically have traded 741, so we've already seen R2, S1, 38,842. So we've been in S1, R2 so far this week, and we still have these Fibonacci's, but now all of a sudden the PPMs are trying to turn back up again. And as I said, this is a risk-on asset, so if my analysis is right and we're getting a little bit bullish in the equity markets, then this is going to be something that will definitely be in play. And we'll start to challenge maybe up to around the 46, 47 handle. Let's take a quick look at the daily, and then we'll get into some of these commodities. Daily, RXT 42,215, 741. That's right at R3, basically. So we're trading in that range, but we're seeing the PPMs trying to turn up. They haven't gotten positive yet, but it still looks more positive than negative, and it's really just this sideways type pattern that we're looking at here. Okay, folks, that's going to be it for our normal cycle. So I'm seeing a couple symbols here. So I would like to start with some commodities, but so I'm just going to pick my own since you guys haven't picked many. And we're going to go over, and I'm going to bring up a couple things here. Let me just put this up. We're going to use TradingView here. I just wanted you to see the patterns. This is the setup that we use in our range for the when we're doing the live trading room. This is utilizing a bunch of indicators from the ones that you can buy, and we're seeing the PPMs here, the webs, and some price projection, some Fibonacci price projection, and the arrows on the left-hand chart is actually the pivots. Those are amazingly useful for stop points and swing trades, what have you. So that make sure, once again, the link is here. You go to kendallreport.com/indicators. Let's get into a couple of these others here. This is actually soybeans. I'll go full screen here. This is soybeans, and this is a daily soybean. I'm going to go to weekly so we can get just a little better picture of some of these trends. And we currently don't have any Fibonacci projections to the upside. If we go back, however, you'll see these dots that are on the screen. That is the, let me just put something on here. That is the value of right here around when we were on, just trying to get the date, December 21st, it was projecting prices to come up to the 116.71 level. And so we printed up in there, and we've kind of stalled right in this range right now. You can see this rising 10 through the pattern here. Let's go in here and let's add in ppm 1, ppm 2, and ppm 3. And just look at what's going on with the trends. Now, this is a weekly trend in soybeans, and ppm 1 is currently starting to fade just a little bit here from the standpoint of going through its first and second derivative. The other pattern, ppm 2, is still positive, and there is a very easy, I'm going to show this to you just real quick, especially those that are using the indicators now. The crossover of both of these, the first and second derivatives, right here when the market was at 1244, that was the buy signal, and you use ppm 2 when it crosses back through the first derivative as a sell signal. So it's been long for quite some time, going back into December. That's a really simple trade that you can get out of these things, and it's absolutely amazing, some of these great trades. So let's take a look at see what else you folks are getting out there. All right, I will do Cetera Energy here shortly. Thanks, Abbey Road. Yeah, let's take a look. I want to look at wheat here real quick, and this has also got that big bubble formation here, and we're just seeing this start to decel a little bit, but the overall trends are still positive. So there's nothing that's going to change in wheat. I still think the food sector, energy sector is still going to continue to be strong regardless of what goes on. Okay, so all right, let's take it. Let's go over to some stocks here then, and I'm just going to do not a lot of them, but we'll do Tesla since it's coming out. Tesla's kind of interesting. I have the price projection tool on here, so we've got kind of a range of expectations here for market to get roughly to about. The potential on the downside is around 845. On the upside, there's a range of 1444. But the pattern that we're seeing, and I've talked about this pattern for a while, we got this. This is exactly what has happened in the past. If I bring this chart over here, you'll see we got a RXT sell signal. I have the market grid up here, and we faded down and then we started to rally up. Well, we did the same thing here. We got RXT sell and we faded down. Now we're starting up. Now the question is, will we see further acceleration? Right now, this is the weekly chart. The PPMs are actually very, very positive here, and it looks like we're probably going to try some of the upward bounds. Now, the market grid for this week is pretty much tapped out. The higher end of the range right now is for 1066, it looks like. So that's about the top end for this week. Yeah, get that number. Yeah, 1066, 1047, 1066. It looks to me that we're setting up a potential for a bigger move to the upside. Let's go ahead and I'll do. Let's go to some of these oil stocks. Yeah, lumber's good too. We'll slitz around here. So lumber did trade up. It's moving back toward its 40-period moving average. PPMs are all negative, actually very negative. So we've got a big rollover. So we bounced down around this level here before. So we traded up into February here, and then we're seeing a retracement. But it looks like they're going to stabilize. So we keep stabilizing a little bit higher. Now this is a weekly chart that we're looking at. Let's go to copper. This makes sense just to stay on this run. Copper continues to have this big move up, and we're seeing this rising 10 in the pattern here, and there is still, while this hasn't been calculated here, we're still looking at the potential for around, I'm just getting the numbers here, 490, 492 is still an upside target here. So another move to the upside here, and that will, once we get a crossover here on the 10, or on the PPM1, that should be enough to get that one going. All right, let's hit some of these. I'm going to bring up XLE just because we did a hack of this in the live room, and this just continues, and this is a really strong chart, and this is my point just in general on the oil stocks, is that they are going to continue to move higher, and this upward slope and trend is very sustainable. This angle of attack that we have here is substantial and is likely, maybe we could stall out in here, but I think it's a consolidation and prices are likely to continue higher. So we'll do Cetera. Let me go to a daily pattern here. Cetera did get an RXT sell. We're probably flat for a couple days here. We've actually satisfied the upward projections. Right now, those patterns are suggesting that the higher end is 28.69. What was the print here? The high was 31.42. The trends are still up. We're probably at a point where we could set up at least some consolidation here on the upside from the, and then see the 10-period moving average move up along it. Right now we've got a pretty big number. 1.38 is PPM1. PPM2 is a 0.98, 0.76. So that angle of attack is huge. So definitely looks like we're going to go higher. This is kind of all-time. Let me go to weekly here. Most likely going all the way out to monthly. Yeah. So not quite all-time new highs here for this one. but we are satisfying even this projection over here that was suggesting that we could see 3130 on the upside. So that's basically what we've already satisfied. All the patterns have been satisfied, but the trends are up big time and not likely to fade, although there could be a little, like I said, some consolidation up here. It's going to take probably 3 to 5 weeks to get this market to, I guess, for the moving averages and the patterns to start to stabilize. I would look at it from this standpoint over here, from the way the 10 is rising up through this pattern. It'd probably be very similar. We'll get some consolidation like where I've got my cursor right now. Yeah, I always hate when I'm broadcasting this. My cursor's in white, but it shows up in black when it gets broadcasted. So anyway, but that's definitely the setup there. So I've got UNG up here, trying to get a longer term. The scaling is kind of screwing up because of the Fibonacci's. But right now, UNG has upward projections right now for 29.79, 32.82. So there's still, looks like a little bit more in this. Once again, the PPMs are off the map. And this is the kind of market where it's really tough to get a handle for how high is high, and especially with the crazy situations going. So Shaitan Tony covered gold a little bit ago. Let's see what else we got here. All right, we're going to jump around a little bit, do corn. I've got this on weekly, but corn is really strong. I guess if we were smart, right, we would stop using corn for biofuels. Maybe eat this stuff. What do you think? But regardless, there's a lot of demand. We've got that rising 10. PPMs are, in the high 2.2 plus on 1.58. So that rising 10 will support this. The worst case for this is that it stalls up here. As far as continuation, I don't have, there's no real targets here. There's no Fibonacci targets. There's nothing out there. I am attempting to reach an old buddy of mine who's an expert in the ag market. So hopefully he and I can do a podcast together sometime here in the near future. All right, this is going to be the last thing for the day. Yeah, and corn is subsidized in the U.S. Yes, it is. Absolutely is. Yeah, that's okay to make vodka with the corn. You just don't want to make fuel. I mean, it depends on what you look at as fuel, right? All right, let me just see what's up here. And this is going to be the final item for the night. So, and this is going to be it for the week. So, yeah, I did GC. I didn't do gold, but it should be very similar analysis. Yeah, let's do Citizens Financial. This will be the final one. I wanted to see what this looked like. So much for the regional banks benefiting from the higher yields, right? So what you can almost map this out to when the Treasury started to, the curve started to flatten. you can see that affected. Now, the money center banks, the bigger banks, aren't being affected by this. This is a weekly chart. We're coming down toward the 200-week moving average. There is some Fibonacci targets down in this range right now, but it's not really significant, and we're trading at the higher end of the grid. So there did get a little bounce here this week. Let me convert this over to a daily. And yeah, so we did gap up. So that's a decent move here. We're way above the market grid. It just kind of gapped out of there yesterday. So we'll see what happens there, but it's right up on the 21-period moving average, down 0.55. So look for some filling of this gap here from that standpoint. Okay, folks, this is it. Won't see you until a week from tonight. And so thanks for all the safe trip, all that. It'll be the airline pilot will have most of the risk in his hands. But anyway, thanks again for being part of this channel. And I would tell you, I'm going over to this page, sign up for these indicators. This is the best thing when I'm not here to have these indicators. And they are pretty amazing. The feedback we're getting, people using this real time, especially intraday trading. And remember, you get a full month access to my live trading room. So that's the benefit. We go through how to use these and trade and do a lot of stuff. So it'd be fun to see some of you in there, and hopefully we will see you there. But sign up and get started, because it's pretty exciting. There's a bunch of videos out there that I've done in how to use some of these indicators. I'm putting together a free masterclass, and we're working on something much bigger than that in the background. So thanks again for being part of the channel. Thank you again. And we'll see you next Tuesday. That sounds pretty weird. All right, folks, hang in there. Good luck trading.